G'day everyone, welcome back to Pete's Investing. Today is April 3rd, 2023. In today's edition I'm going to be doing a market update on Apple and Microsoft, but also going to introduce another trading strategy which you may want to use in your trading experience. So just hang in there for a few minutes and I'll explain what that strategy is. But first off, just looking at the market analysis for Apple. As you can see here, we've drawn this key support line as well as this resistance line, and you can see there it's broken up through that resistance. And as part of this, I've also drawn this Fibonacci extension, and it was previously sitting just below that resistance area at 50%, and now it's broken up through that resistance and sitting at just above the 61% extension on the Fibonacci. And as if I pull out on that time chart on the daily, obviously, this is I've got two. As well as those support resistance lines, I've got these two other support resistance diagonal trend lines. The bottom one is coming up from those bottoms there, and the top one is coming down as well from those recent highs. You can see there. So our next level of resistance will be this descending trend line. So that closely aligns with the 78% extension. So we may get to that point, possibly. I've also drawn this Fibonacci retracement from that high to that low, and you can see there it's currently sitting at the 78% retracement from that bottom. And again, that diagonal descending trend line corresponds with that Fibonacci retracement at 88% retracement. So that's where we are there. But you'll notice also our key indicator down here is the CCI 1500, and we always use this as a major indicator, as a potential trend reversal and early indicator. You can see there quite clearly the moving average 200 of the price chart the price is still above that and still trending upwards until it finally breaks convincingly down at that point there. But you'll notice our CCI 1500 with the moving average 400 gave us early signals and a potentially early exit at that level there. So that was February 21, whereas moving average of the price chart indicated that it's in May 22. So almost a year later, it goes a later signal. So yeah, you could have missed out on those trades there possibly, but again, that's just to be conservative. If you want to be more conservative in your trading, that's just an idea to use that as an early indicator to get out of the trade. Okay, so where are we now? As well as that, in terms of the analysis on the technical side of Apple, we're also looking at Apple. Let me just go put. And this brings up the, again, our secondary level of income would be a dividend. You can see there, Apple pays a small dividend, but nonetheless it's a dividend. And the reason for that is, again, one of our rules, if you're ever caught out in a downtrend and you're holding this stock, at least you're potentially receiving some dividends if the company is still paying dividends. And you can see there was a dividend payout in those little areas there. So you're still getting an income, in other words, while the price is possibly falling against you. We don't use stop losses. We use the average down approach. So what that means is for you, and this is the trading idea. I'm not telling you to buy today or tomorrow, but it's just giving you an idea of what we're looking at. So first of all, let me just show you a couple of things here. It's going to look a bit busy, but I want to explain something to you. First, let me explain this bottom graph here. This is if I'll drill out to the full history. I've gone now back to 2007 to show you what the effect was during the GFC, and then more recently during 2021, during that little period that was COVID, that little drop there. Now what this shows you here is this top chart shows the profitability chart. So if you started trading back in 2007 using this strategy, today you'd be sitting around about $9,400 in returns, and that factored in an $8 brokerage for every trade you make. So that's factoring in brokerage as well. So that's 9,400. This second strategy down here has given you an income or revenue stream of about 6,092. So slightly about $3,000 more for this strategy, and I'll explain the difference between the two strategies. First of all, and you'll notice what these little steps here are. That just shows you how many times you've entered in the number of shares. So here you've entered in 1, 2, 3, 4, 5 times entries, and each time we're entering $2,000 lots. This one down here we've entered in once, and then twice here. Another little trade there, entered once, twice. Every time the steps finish, you'll notice there's a little gap. That means you sold out of the trade. So our primary goal is to make a revenue by buying and selling. And I've done another video, what it looks like if you buy and hold versus using stop losses. And this is the most effective, profitable way of getting income. The day I stopped using stop losses was the day I started becoming profitable. So my suggestion is don't use stop losses. The trick is to be very careful about money management and have some strict rules. Now, let me explain here as an example what I mean by that. So again, let me just drill down here. Again, our common strategy here is using the CCI as our indicator to buy into the trade when it's going long. Remember, we're buying shares here. You can apply this to any strategy, whether it's currencies, indices, CFDs, shares. I'm applying it to shares here. So consider this: if you're buying currencies, for example, you can consider each one of these steps as one contract. So just, again, this works on any instrument and almost any timeline. But the trick is, I'm just showing you be careful of money management. Now, this is where comes in handy. So the bottom strategy here, the one that reaped 6,092 versus the 9,400 over that period, we only buy when the CCI is above the moving average, and if it's below the moving average, like in this period, we don't go long. We only go long when the CCI is above its moving average. And you'll notice here there are no contracts entered for this period because we're below the CCI moving average. Up here, this strategy, the second part of the entry parameters are, and what I've done here, I've put a little. It's going to look a bit busy, I know, but let me just drill down on what it looks like in detail. And I'll go to a long entry. So let's go back to this period here when the price is going up and we're entering long. At the bottom of the chart here, you'll notice, I've got these little spikes. So whenever it's showing a spike up, that means the candle has broken up through the fractals. So this grey area is the fractals, and fractals are pretty common in most charting software. And that blue line up there, so if you entered long there, that would have been your 5% target. So I've entered a 5% target range here. And I found 5% is typically a nice sweet spot. You don't want to go too high. You don't want to go 10% because you may not hit that target for some time. So you want to get in and out of the market often to be able to get some cash flow. And the bottom, the red one, is if you're going short, again, you can trade this method on any instrument. If you're going short, that's the short target, the 5% on a daily. So you can see here that spike says the candle is broken above the fractal, so it's a buy opportunity. So that's where you entered potentially one. Another entry would have been at that point there, it broke above the candle. Notice this candle is after this candle, so the second candle is already broken above. So we only enter when it breaks out of the fractals. We don't want to enter too many times. We only enter when it breaks out of the fractals. So we don't enter on that one when it's above the fractal already, nor do we enter on any of those. Again, another entry up here, when it breaks above the fractal, we let it ride. That's your target. And your target would have been hit probably on that wick there, or on that candle there somewhere. So basically I've got here another 5%. This blue line is a 5% gain above each of the respective candles. And then back here, for example, had you be going short on this particular instrument, if this was a currency, for example, you would have gone short there, and that would have been your short target. So you can see there that wick hit the target, and you would have got out of your trade there. Now, the difference between these two strategies, again, the bottom strategy only goes long. In this case, we're going long only when the CCI is above its moving average. This one doesn't use a CCI. This only uses the fractals. So again, just drilling down in that for a moment. You can see there it broke above the fractals, and you would have gone long into an entry there. Now you'll notice the CCI is in a downtrend, so that's the parameter we've taken out of this top program. So, and if we scroll across to this area over here, you'll notice here we've entered in 3 times, 1, 2, 3 times. But the CCI is still in a downtrend, so we're not considering the CCI on this one. This one is not made any trade entries because we only enter when the fractal breaks, when the bar breaks above the fractal and when the CCI is in an uptrend. So again, if we drill down in this area here, you can see there the bar broke above the fractal. We enter one contract or one set of shares. The price goes against us, and we enter another contract there. And that so now we've got $4,000 invested in this. So remember, we're entering in $2,000 in this particular share. We're buying $2,000 lots. So we entered $2,000 there at that point. Price goes against us, breaks above the fractal, enter another $2,000. Now we've invested $4,000. We'll keep going further. We enter a third lot of shares at that point. So now we invested $6,000 in that point. So you can see there our profitability chart. We've started off with, and I use a baseline of 100,000. So we start off with 8,880 in our account. After we've traded those 3 contracts or 3 lots of shares, invested $6,000, we close out at 9,109, and that includes brokerage. So again, I'm emphasizing the fact that you want to try and get an optimum level of income without being too over leveraged in too many shares. So you can see there, for example, in that little period, we've entered 2, 4, 6, 8, $10,000 lots because the price was going against us, but we entered every time the bar broke above the fractal. Now it did close out. You can see there we started off with an account of 4,217. We closed out at 4,665. So we invested $10,000, but over those few months, we came out on top. This one only buys when the CCI is broken to the upside. So you can see there, it entered one lot of shares there. The price came back up again. We didn't enter any more shares, and we closed out at a profit. This one, we entered in one lot of shares there. The price went against us in that little drop. The CCI was still in an uptrend. We entered a second lot of shares. We closed out. Anyway, don't want to overburden you with too much of that, but that's basically the strategy in terms of the average down approach, because I often talk about the average down in my videos, in each of my videos, and this is just one example and one strategy you can use to average down. Next, we're looking at Microsoft, and again, just zooming out the big picture, you can see there profitability of the one where the CCI is used. Revenue since 2007 is 4,377. For the one that does not use the CCI, just uses the fractals only, it's 6,600. So you made an extra roughly about $2,000 more by not using the CCI. That sounds promising and more attractive, but again, just be mindful of the drawdown. Again, looking at the drawdown here, you'll notice that level of drawdown. The drawdown is basically from the highest level of profitability to the lowest level. So the one where we're using the CCI, it dropped from 1,250 at that point there, down to 98,600. Again, we're using 100,000 as a baseline. So that's roughly maybe $2,500 drawdown. This one starts off at about $1,000 and it drops down to 96.9. So you're down about $7,000. So again, because you're in more contracts, the drawdown is going to be deeper and you're going to be more in the red. The trick is, again, with money management, you must have a strong gut to withstand that account being in the red for that long. But again, remember, in that period, I'll just drill down there. You can see here, if you were trading Microsoft during that period, you would have received a few dividends during that period. There's a dividend there, another one there, and another one there, and another one there. So you would have been receiving dividends. So long as you can withstand the drop in your account for this particular trade, using, if you bought $2,000, $4,000, $6,000, $8,000, $10,000, $12,000 invested, you finally would have broken out with a profit, but the pain would have been potentially seeing your account in a red. So it's a matter of how disciplined you are in terms of money management. This one, on the other hand, you would have been invested only $4,000, $2,000, $4,000, $6,000, and it would have closed out later, but you still would have been in positive return with less drawdown. So let's drill down to Microsoft. So just ignore those top 2 charts for the moment. Let me just hide those. So ease it up. Okay, and let me hide the fractals for the moment as well. So you can see here on Microsoft, it's broken above this key resistance area, and it's also broken above this diagonal trend line. And we had a wedge forming here a few days ago, and it's broken above the wedge initially. Now it's broken above the resistance area. You'll notice also it's broken above the CCI 1500, which is the key area in terms of minimizing and being more conservative in your buying opportunities. So again, and I've also drawn a Fibonacci retracement here. You'll notice in terms of the downtrend, the retracement has gone past the 50% level, and now it's just reaching the 61% Fibonacci. So that may be the next level of resistance we've got to be mindful of. So again, you could possibly trade those little jumps, so those little returns up there, but again, you're trading against the trend. So again, be mindful of that. So that's where we are. Again, to get more ideas and more strategy ideas, reference some of the links in the description below, but also look at reference my strategy playlist. If you like this video, press the like and subscribe button. If you really liked it, feel free to support us on Patreon. And thanks, and see you in the next video.